In this video, we have new data confirming that the big institutional investors on Wall Street do not know what the fuck they are doing. Surprise, surprise. In addition, it also turns out that Tesla retail investors most certainly do know what they are doing. We're going to look at an article featuring some truly damning data, an indictment on the groupthink within Wall Street, and how some of the smartest people in the world have managed to miss out on one of the most obvious opportunities in the history of the stock market. And if you didn't catch the latest exclusive video on Patreon, it's called The Truth About Haters, full of very compelling insights and highly recommended. If you're not a member of Patreon, you can join with the card in the corner or the link at the pinned comment. We're over on the Balls Deep Journal. Quote, Tesla is last stronghold for investors buying the dip in tech stocks. Why would I invest in a basket of dinosaurs? One diehard says of other big US stocks. That is a great question, my friend. After a brutal year for technology stocks, and that is quite the understatement, individual investors have lost their appetite for buying the dip, with one notable exception. They are still scooping up shares of Tesla. Fancy f***ing that. They're talking about us, ladies and gentlemen. Individual investors' net purchases of a basket of 8 popular tech stocks hit a recent peak in November before dropping sharply through the end of the year, according to Vanda Research. Buying has since picked up slightly in the new year as tech shares rebound. The hilarity, by the way. Oops, they're going back up now. Better buy them again while they're going up instead of having been buying them when they're... Anyway, let's not go there. So check this out. Individual investors' net purchases, 10-day sum. Retail tech basket in blue and Tesla in yellow. And as we can see, retail investor buying activity on Tesla stock is absolutely surging. For those wondering, the retail tech basket includes Apple, Meta, formerly Facebook, Netflix, Amazon, Alphabet, Microsoft, AMD, and Nvidia. And as of the most recent data, more Tesla stock in dollar amount is being purchased by retail investor than all of the stocks cumulatively in the retail tech basket. Tesla stock isn't just being bought more than Apple stock or more than Microsoft stock. It's being bought more than all of these stocks combined in dollar value. This is insane. As for Tesla, individuals have been steady buyers since the end of 2021, doubling down when the stock tumbled to close out 2022. They have spent more money on Tesla shares in the past 6 months than in the past 5 years prior. Let that sink in. No, really. To reframe this, if the same rate of buying activity was sustained for an entire 12 months, this would effectively be about 1 decade worth of purchasing in a single year, about 10 times more. It's almost as if retail investors could see through the noise and actually recognize the opportunity that Tesla stock represented as it continued to tumble lower, to the point where its valuation, its forward PE, became even cheaper than Coke, Pepsi, and Chipotle. I said at the time it made no fucking sense, and it didn't make any fucking sense. It still doesn't make any fucking sense, but it happened. And I think retail investors also knew that it didn't make any fucking sense. On January 10th, one-day net purchases of Tesla shares hit a record high of $316 million. Quote, as markets took a big hit, we saw retail investors shift into their favorite tech stock rather than investing across the whole sector. Vanda analyst Lucas Mantle said of Tesla, quote, it might be the last shoe to drop. The Federal Reserve's fight to completely destroy the US economy through aggressive interest rate decreases last year abruptly changed the outlook for big tech stocks, which for years had lifted the major stock indices to new highs. Investors were forced to reassess the pros and cons of investing in companies whose appeal centered on the prospect of huge profits years down the line. By the way, Cathie Wood's talked about this quite a lot in the last year or so. Short-sighted, short-term, and short on grey matter investors, using the term loosely, panicking their way out of growth stocks, punishing companies, the very companies who are disrupting the old world, punishing these companies, the disruptors, running away to those companies and those industries that are currently being disrupted, because that's what you do. Right? Oh, interest rates are going up. Better panic my way out of growth stocks and buy some energy stocks. Can't go wrong, right? It's just miraculous watching what's happened here. I mean, energy stocks in 2022 were one of the best performing categories of stocks. Those very stocks that are currently being disrupted by batteries, solar, hydro, wind. Exactly. Tesla shares dropped 65% in 2022. Their worst year on record. Facebook parent Meta platform sank 64% and Netflix declined 51%. And obviously, this is proof that Elon Musk caused Tesla stock to crash. That's why Meta also crashed a similar amount. Likewise, Netflix. It's Elon's fault. Haven't you heard? But tech and other growth stocks have rebounded to start the new year, buoyed by hopes that the Fed will slow its pace of destroying the US economy via rate increases. The S&P 500 has edged up 3.2% in January. In the coming week, investors are awaiting quarterly earnings reports from Tesla, along with Microsoft, Intel, and other big companies for the latest updates on how they are weathering tough economic conditions. By the way, I'll spoil Tesla's earnings call for you guys in just a moment. Let's finish this paragraph. They will also pass the Fed's preferred gauge of inflation for clues about the trajectory of monetary policy. Okay, so regarding Tesla's earnings, Q4 2022 earnings reported in a couple of days, here's what happens. Records or near records across the board. on everything that matters. Tesla will also face lots of questions. Hey Tesla, what about your margins? What's going to happen? Oh my God, recession, price cuts, help, what do we do? Please tell us the exact number of gross automotive margin we can expect for the year, please, Tesla, because we can't figure it out for ourselves. Tesla will say something along the lines of, Austin and Berlin continue to weigh on margins, but margins will improve as these factories ramp up. We have a lot of pricing power. We're benefiting more from economies of scale. Some of our material costs are coming down. We're seeing deflation in some of our parts and materials. Due to the corrupt EV incentives in the United States, we were forced to lower the prices of some of our products to become eligible for those corrupt incentives. We saw a huge surge in orders. We continue to monitor the situation and will continue to adjust pricing dynamically as required. Tesla will continue to sell every vehicle they make for years to come, and they'll tell us this. This is the advantage of having industry-leading profit margins and enormous pricing power. I can all but guarantee there'll be some Wall Street analysts on the earnings call who are freaking the fuck out about a recession. Oh my God, don't you know, Tesla? Automotive sales collapse during a recession. What are you going to do? To which Tesla will say, we do actually see our order flow internationally. We do have pricing power, and as we mentioned, we will adjust pricing dynamically and continue to sell every vehicle we make. To which the analyst will have a follow-up question. But Tesla, don't automotive sales collapse during a recession? Aren't you scared? Isn't the competition coming? To which Tesla will reply, did you fucking listen, you moron? We have pricing power. We'll sell every vehicle we make. If we're lucky, Tesla may even emphasize the fact that over the long term, they expect to maintain approximately 30% margins. But over the short term, their goal is to sell through production, build their install base, and awaken the robotaxi fleet. Tesla will once again reiterate their guidance, aiming to achieve more than 50% annual rate of delivery growth over a multi-year horizon. Wall Street will get butthurt and mad because Tesla didn't tell them an exact number for 2023, because, they kind of expect Tesla to do their job for them. And I think overall, the stock market, including many of the geniuses, just won't believe what Tesla tells them on the earnings call. There's no way they could possibly keep selling all their production. They're going to have to slow down, right? Wrong. So that's the spoiler alert for what we're going to hear on the earnings call and the analyst questions in a few days' time. And now check this out. Individual investors' net purchases of Tesla stock daily from 2021 all the way through 2023. As Tesla stock tumbled lower, individual retail investors, that would be you and I, bought more and more and more and more. Literally the very definition of buying the fucking dip. Now I believe these decisions will age rather well. And just for fun, I actually did the math. On a few of these occasions, I actually accounted for approximately 0.01% of the buying activity on any given day. It'd be interesting to know what percent of the total buying activity of individual Tesla stock investors were people who watch this YouTube channel. Let me know in the comments below. Did you buy Tesla stock at any point during 2021, 22, or 23? Have you been buying more recently? Has your buying activity tracked pretty closely to other retail investors? E.g., the lower Tesla stock went, the more you bought. I do, once again, just want to underscore. At the exact same time that us dumbass retail investors who don't know anything about anything are loading up on the dip, big institutional investors are dumping Tesla stock left, right, and center, panicking their way out of the stock, selling it to us retail investors at a massive discount. This is an indictment on Wall Street. I was stunned. I'm still stunned to see how low Tesla stock went. Expecting at some point some institutional investors going on, wait, what? Nah, that doesn't make sense. Let's fucking buy. We hated this stock at 400, but at 200? Okay, we're buying. I could not believe how far Tesla stock plunged, how ridiculous and completely detached from reality it became. Again, going back to the example, the Ford PE, it became cheaper on a Ford PE basis than Coke, Pepsi, and a fucking burrito company. Like, hello. It made zero sense that Tesla was valued at less than two slow-growing diabetes in a cup companies. It made equally little sense that Tesla was cheaper than a fucking slow-growing burrito company. Yet it happened. And I was expecting, surely these big institutional investors on Wall Street aren't that fucking dumb. Eventually it gets cheap enough that even based on their dumb metrics and their really embarrassingly low estimates, it'll seem cheap, right? I just couldn't believe what I saw. Yet it happened. And I really think this comes down to the open ecosystem of people researching Tesla, sharing their thoughts and opinions about Tesla. Different data points. You've got Twitter, you've got YouTube, you've got podcasts out there, interviews happening, discussion everywhere. Individual retail investors now, while we don't have access to the same information as Wall Street, we do have access to information that previously wasn't available to anyone, Wall Street or otherwise. And I think the big mistake that the Wall Street investment banks are making here, the big institutional investors, is that they're ignoring some of the most important data points. There's a little bit too much hubris involved. I think every single one of the big investment banks on Wall Street should be watching Tesla daily, every day, just to see what's going on. They should also be watching every interview Dave Lee does. And Farzad. They probably shouldn't watch this channel because I'll just hurt their feelings pointing out how dumb they are. I think Tesla retail investors have a huge advantage over Wall Street at this point in time because Wall Street thinks the way that we do things, the way that we research, the information we have access to, that's all we need. Whereas I think a lot of retail Tesla stock investors are looking at sources of information, content, ideas, opinions, analysis, and so on, that Wall Street is completely ignoring that could teach them a lot. How many firms on Wall Street do you think covering Tesla stock have watched every interview between Dave Lee and James Dowmer? Have a guess. How many of them? Because they should all have watched every single one of those interviews. I think it'd be hard pressed to find more than a couple that had watched any of them, let alone all of them. This kind of matters. Again, proof's in the pudding. Retail investors buying the absolute out of Tesla stock as it continued to tumble lower and lower and lower at the exact same time that the big institutional investors were dumping the stock and selling it to us for a discount. Even as skeptics cite concerns about production disruptions, demand worries, and techno king of Tesla, Elon Musk's divided attention after his acquisition of Twitter, Tesla's most ardent supporters keep their faith in a long-term payout. Abbas Gupta, a 41-year-old entrepreneur in Irvine, California, said he moved his whole equity portfolio into Tesla shares in 2018. Round of applause, brother. I think that move has aged rather well. Enamored by its electric cars and promise of disruptive innovation. Last year, he lost his entire 7-figure retirement fund after taking out margin loans and using options to turbocharge his bets on Tesla, he said. Still, he's far from calling it quits. Quote, I basically burned a lifetime's worth of wealth, but none of this has shaken my confidence in the company. There is just no company even remotely close to Tesla on innovation. Fair point. I'll tell you what, I know a lot of people personally using margin who have a very sore butthole as a result of the last 12 months. Why would I invest in a basket of dinosaurs, he said of the S&P 500? And this is actually an excellent question. Why would you? Most of the companies in the S&P 500 are going to get disrupted this decade. Most of them probably go bankrupt this decade. They'll slip out of the index. Disrupted by innovative companies like Tesla. I think investors who have this perception that investing in a fund like the S&P 500 is safe and conservative are in for a rude awakening. The S&P 500 literally is a basket of dinosaurs, with a few rare exceptions. Mr. Gupta said he's aggressively buying long-dated call options on Tesla. The question is, has Mr. Gupta learned his lesson? Now, in fairness, I don't currently own any Tesla options, nor have I ever. However, I do pay attention. And long-dated options at this point in time with Tesla at these levels certainly aren't looking like the worst deal ever. Of course, there is the risk of Tesla stock behaving in ways you wouldn't expect. Shout out to the last 12 months, which I would never ever have expected would happen. But hopefully, things work out for Mr. Gupta this time. Call options give traders the right, though not the obligation, to buy shares at a stated price by a certain date, while put options grant the right to sell. Overall, options volume in Tesla has grown in the past few months. One of the largest options bet on Tesla is that shares will reach $825 in the next 3 years. The stock closed at $133.42 per share on Friday. Now, if ever you wanted to see a big ball bet, for what it's worth, my base case price target for Tesla stock, should it pan out, Tesla stock will blow past $825 within 3 years. However, I also need to add the caveat that my price targets are not based on the stock market understanding what the Tesla is, or valuing the company fairly. They're based on what I believe to be fair value for Tesla stock, which, spoiler alert, today, Tesla stock, $130-something a share, makes no fucking sense, but it's happening. It's important to add this caveat because just because I think fair value is this, doesn't mean the stock market will be valuing Tesla stock what I think fair value is. Maybe somebody can set a reminder to check back on this video in 3 years' time and let me know what happened. Did Tesla stock exceed $825 within that 3-year time frame? This is probably my favorite chart from the entire article, and I'll explain why. We're looking at Tesla option volume. Puts, as in betting the stock's going lower, and calls, as in betting the stock's going higher. Now, you may notice something. The lower Tesla stock has gone, the more absurdly cheap Tesla stock went, the more people betting Tesla stock's going lower. If you ever needed to see a clearer example of the bell curve in action, I don't think you'll find one. This is literally ass fucking backwards. Well, note that those betting Tesla stock will go up seem to be acting fairly rationally. The lower it went, the more people betting Tesla stock will go up. Yet at the same time, there's a bunch of dipshits, and I do want to make sure everyone understands, dipshits doubling down. Oh, look, it fell. I'm right. My thesis is right. They're going bankrupt. I'm going to bet they're going even lower. But you can't make this up. The most amount of activity in Tesla puts, the most people betting against Tesla, right, we can see here in yellow, is literally at its lowest point over this multi-year period. Can you imagine initiating a short position, betting against Tesla, buying Tesla puts when it's just over $100 a share? It's already collapsed nearly 3/4 in the last year. I mean, for real, you just can't make this shit up. Some people will never learn. Gabrielle Wilson, a 52-year-old physician who splits his time between Texas and New York, said the Fed remains his primary concern in the market. After first leasing Tesla's Model X in 2018, he said he moved all of his investments into Tesla. Although he cashed out his holdings around the end of 2021 due to concerns about near-term market weakness, he's looking to buy Tesla shares again soon, he said. Despite last year's market turmoil, he hasn't touched a roughly $100,000 trust fund for his son held solely in Tesla shares, he said. By the way, when I did my Christmas shopping this year, I loaded up on Tesla shares for some family members, all under 10 years old, and they won't be touching that shit for more than a decade. Just between you and I think that's probably going to be the Christmas present of all Christmas presents. Quote, no one can compete with Tesla, Dr. Wilson said. Quote, I have absolutely no doubt Tesla is the future. Many professional investors, I think that's an insulting term to be honest, many professional investors remain cautious on tech stocks to start the new year. Fund managers, following the herd, rotated out of technology stocks in January and are more underweight the sector than their historical positioning, according to Bank of America's latest global fund manager survey. I mean, seriously, these are some of the dumbest smart people on the planet. Oh wait, what do we do? Fed's rates up. Okay, let's sell growth stocks because that's what we do. but some individuals are betting that tech could reign supreme again if the Fed signals plans to pivot from raising interest rates. Federal fund futures, used to wager on the course of interest rates, show traders expect the central bank to cut rates later this year, even though Fed officials have repeatedly said their work to cool the economy isn't done. Oh, sorry, I misread that. Their work to completely destroy the economy isn't done. Nikki Borlufus, sorry about the pronunciation, 51, said she bought shares of AMD and Nvidia last year, then refrained from adding new positions as those semiconductor stocks struggled. The financial public relations consultant in Sydney said she is looking for opportunities to pick up shares of Tesla along with Microsoft, Apple, and Alphabet. As soon as there's any hint that interest rates will be cut, then I expect tech stock to rally, and I'd like to be there and positioned. I use their products, and I'd like to also reap their profits. So what's the lesson in today's video? Well, it seems that the collective geniuses on Wall Street are part of a collective hive mind, groupthink. What do we do when this happens? Oh, we do this? Well, let's all do this. What do we do when that happens? Oh, we all do that? Well, then let's do that, because that's what we do when that happens. It seems like none of the big investors on Wall Street know how to think for themselves, to think independently, and to use their fucking eyes and brain. Instead, just a gigantic rule book. Wait, what do we do when the rates are going up? Oh, okay, that's what we do. We panic out of growth stocks and buy these. What do we do when this is happening? It's like color by numbers, except with investing. And there is no greater example of this than Tesla stock. As the stock tumbled from over $400 per share to $300 to $200 to almost $100 per share, it was the big institutional investors dumping the stock, selling it to us retail investors who are going, bro, bargain of the fucking century, I'll take all your shares, thank you. As I said earlier in this video, it stunned me. I could not believe that what I thought would be the support from the big institutional investors as Tesla's valuation became super absurd, just so cheap. I thought there'd be support and there was none. It continued to plunge further. And it was Tesla retail investors loading up and buying the dip. The lower Tesla stock went, the more Tesla retail investors were buying. It just truly blows my mind. But Tesla managed to get as cheap as it did, cheaper than Coke, Pepsi, and Chipotle. And the big institutional investors were nowhere to be seen, except on the other end of the trades, selling their stock at massive discounts to us. Yet it happened. And here's a prediction. I personally believe that over the medium term, Tesla stock will continue to climb higher. And at some point, big institutional investors will start piling back into the stock after it's moved an enormous amount. Because A, they're no longer panicking, and B, their rulebook of what to do when now tells them to buy Tesla stock because now it's time to buy growth stocks, the ones we just sold when they were at all-time lows. We wait till they go up a ton and now we buy them again when they're much higher because we're really smart, because we're Wall Street. But let me know in the comments below if any retail investors have been buying Tesla stock while the institutions have been dumping it. Or was it just me? And if you'd like loads of exclusive content, now 280 exclusive videos and counting, plus my Tesla price targets. And by the way, the latest video I've just dropped on Patreon moments ago is an incredible look at the capabilities of ChatGPT, which could potentially save you hours every week working as your own assistant. I'm not even kidding. You can join Patreon with the card in the corner or the link in the pinned comment, and spoiler alert, there'll be a lot more content on the progress of AI in the coming days, weeks, months, and years. So, see you over on Patreon. Love ya.